Whether you're an avid property investor or about to buy your first property, why do it alone when you could partner with Australia's best buyer's agent? Director of Pure Property Investment, Property Investment Professionals of Australia board member and REB Buyer's Agent of the Year, Paul Glossop, can take your portfolio to the next level. Get in touch today to discuss your investment goals. Get one-on-one insight from Paul Glossop. And for the first 100 people, this service is completely free. Head to purepropertyinvestment.com today to schedule your consult with Paul Glossop directly.
Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
It is What's Making Headlines with Phil Tarrant, who is from Momentum Media. And most of you watching this, of course, will actually know more Momentum Media from their brands. Better Business, REB, of course, the REB Daily News and REB Top 100 and all of the REB awards, and of course, Smart Property Investment. We normally have this session on a lunchtime on a Thursday. Today we'd try and do it because I honestly wanted to move it so I can actually have a look at where your outlook is in the back of your property. Look at that.
Oh, mate, it's just a fancy... like you, mate, Space Age. It's just a nice filter from the Zoom, right?
Nah, that ain't a filter.
Is it a
filter? No, it's not a filter. That's where the money is. You can't be built out in that spot there. And Phil, how's life been?
Mate, it's good. It's good. It was good to see you on the weekend. I really enjoyed that.
How good was that auction?
I know. So for those of you that I did a couple of posts on Facebook around it, but I went out to Tom's first auction post-COVID, the first auction he was allowed to get involved in out of Birrong, which is out sort of, I guess, which is sort of inner southwest Sydney. So I made sure I was there to watch the first auction. It sold, Tom. No one even had to ask whether or not it was on the market. It hit its reserve, and Tom did a great job moving that property for what was a pretty good price, mate. What did it end up going for?
I forget, you won't believe it. I've got a very good memory on certain things, but you can ask me the price of a property 5 minutes after I've left, like 5 minutes, and I forget because it's all numbers, but I'm going to have a punt and say it was around 780. It was over the reserve price. And you are right, Phil. I rarely announce things on the market, and I haven't for years, because what happened is that I began to notice that a lot of buyers would not bid till they heard the words on the market. And then what I did is one day I actually announced at the start, I'm letting you know, don't wait till you hear the words on the market. I won't be using those words. And that day people bid. And now I generally actually say it at the start of an auction, ladies and gentlemen, don't wait till you hear the words on the market. I'll call 3 times and sell when I'm at the level. And I find people bid earlier, but I am blessed. I work in a marketplace where really they don't have to be on the market because they're all selling anyway. But Phil, we've got a great night to talk about a few things. We're going to talk a little bit about, firstly, we know that tomorrow is the first day of semi-lockdown, relax, 10 people at a restaurant or at a pub that's got a restaurant in there. It'll be interesting. There was a survey done, Phil. 2/3 of people aren't going to go out. I mean, I would have thought to myself, everyone would have rushed out, but 2/3 of people are going to stay put. So, what's your take on it?
Well, I heard I'd sort of like chatting to the local shops and local restaurants, and one of the guys I spoke to, and I saw some articles in the paper, is that restaurant bookings are through the roof, and it's hard to get a spot at a restaurant in Sydney on this coming Friday. So obviously there's a lot less space available for people, but I think people want to get out there. Would I be rushing out to a restaurant or a pub right now? Maybe not. I think it's going to take Australia in general quite some time to get used to the idea of life coming out of COVID-19. And even though the government might allow us to actually get out there and do stuff, I think the reality of it is something very different. But there's a number of different stories in what's making headlines today, which is connected with this. And one is this idea about agent training and how that's going to bounce straight back into gear as we come out of COVID-19. But the other one is around these auctions. And there's a piece here, Tom, REIV applauds return to on-site auctions and open for inspections. The Victorian State Government has confirmed their plans to cease ease COVID-19 restrictions, which enable on-site auctions to open for inspections from Wednesday. That's yesterday, 13th of May. So we did our first auction. I went out there, mate. You shifted that properly. Tell me about those white dots on the floor. That was social distancing.
Yeah, well, that's proactive. And I've got to say one thing about real estate agents. I mean, they cop it a little bit because of a reputation that they've had over the years, but they have been proactive in actually going beyond the call of duty. So what the agents had done, Century 21 Bankstown, Peter and John, what they'd done is actually put white circles 1.5 metres apart all over the front yard, which gave a good reference point to people on where they should be doing. And your partner, who actually came along to the auction with you that day, asked, is that something that needed to be done? And then we clarified it wasn't law, it was the real estate agents sort of being proactive. And I think what's happened is agents have got intelligent about it, because they actually know that if they're smart about it, they're actually not going to go backwards and then be told you can't do it. We're seeing videos of people, they're all squashed together. There's a headline in the media. So they are being proactive, and the normal stuff. There was a lot of this everywhere. I still haven't worked out, Phil, why I have this in this studio. No one comes in here except myself, but for some reason I've got it, mate. And I put it on my hands. But Phil, you're right. Melbourne, he's got to be the premier that a lot of people, like real estate agents, don't particularly like the Melbourne premier for what he did 3 or 4 weeks ago before Easter. He sort of got him by surprise on the Thursday and said there's no appointments. Yes, open for inspections are now allowed, and auctions are allowed. And I had realestate.com on today on the show, and I can tell you that they've indicated to me that they've already started seeing more properties hit their website in Sydney as soon as Gladys gave the go-ahead for open for inspections and auctions. Phil, stock levels have been very, very low, the lowest. Like any data you look at, it's actually daunting to actually see how on earth real estate agents were able to get by and getting by, because stock levels are terrible, and stock levels are what keep agents going.
Well, we spoke about this a couple of, probably our very first What's Making Headlines, which would be a month or so ago now, Tom. And we spoke about how some agents were having the best months they've had in a long time, and that is realising dollars in their bank account from properties that settled some time ago. And this dichotomy around qualifying for government assistance or stimulus via JobKeeper. And a lot of agents in April and even in May won't be able to show that decline in revenue purely because it's a product of the work they did a couple of months ago. So, agents have got to really start hurting in this period now from June, July and August because of this reduction of stock on the market. The properties aren't there for them to sell, coupled with buyer sentiment or even seller sentiment around whether or not it's the right time to transact in real estate. So, we spoke about some of the stamp duty changes, which would help stimulate activity and get more stock on market. But a lot of agents are going to be hurting in the months ahead, sort of the 3, 6, 12 months ahead. But for property investors, and that's a big part of this discussion as well, if you're in the market and you can buy right now, it's not a bad time to be looking around. There's a lot less competition out there. That said, though, supply and demand, in the auction that I saw, you run out at Birrong on the weekend. There was quite a lot of bidders there ready to go, Tom. And
12 registered.
Yeah. Low board you, I think, at 400 grand first bid, which you handled pretty well. But
he bought it in the end, didn't he?
He bought it in the end. Yeah,
that's right. He opened the bidding at 400. The guy that kept hiding behind the tree.
That's right.
And I gave him my nice response that, sir, that would have been a good offer. That's the good bit of my response 10 years ago, and that's the bad bit of the response. But Phil, before we move on to that next topic, I mean, the interesting issue is that if you can recall last time this year, we actually weren't going through a great time in real estate. It was the time that it was just pre-election, negative gearing was being talked about. There was the Royal Commission into banking, and things weren't great. So you actually didn't have great real estate times then. So I actually think that some of the real estate agents are going to be able to qualify for their job keep allowance in the next couple of months, because we have a lag of a few months. When you make a sale or you don't make a sale, that money hits a bank account. So when you make a sale and when the money hits an account is usually a lag of 2 months. And the other thing I'll say is that sales started to happen pretty much after the federal election. So maybe some of these real estate officers will get job keep in the next few months. But even today, I heard a report, job keep. That's concerning, Phil. I think they're saying 6 million people on job keep, if I'm correct.
Yeah, it sounds like a lot. There's only, how many employed full-time people in Australia? It's only 7 or 8 million people. There's a lot of people on JobKeeper. To your point, I'm not an expert on this by any means, but I've looked quite a lot into it for a lot of our markets. And you need to do comparative analysis on similar periods. So you'd compare April with this year, with April of last year, etc. So when you consider the reduced stock on market and reduced transactions, which probably would have started taking impact or effect late March, dollars in the bank in April and May, I think June for the real estate sector, for those that are struggling, is probably that good period, because you'd be comparing your June numbers with June last year, and that was right that period of flux with the federal election uncertainty around who would come into government. So it sounds like that period, Tom, is probably the right one, July, August for real estate agents, but they're talking about potentially winding this up pretty quick, September, October of this year out of job keepers. So who knows? I think it still comes down to, don't sit there thinking that the government grants, government stimulus is panacea for all your problems. Get out there, work the phone. There's deals to be done. There's listings to be had. And that's encouraging what you're saying about REA, that after these initial restrictions around auctions and listings and open for inspections, that lists properties are now starting to hit these portals, and that should translate into sales. But, you need to go and find them rather than those listings coming to you.
Are low interest rates impacting on your investment returns? It's time to rethink. Rethink Investing creates wealth for clients through the strategic purchase of positively geared, high cash flow commercial property. Industrial properties, retail assets, or office spaces can be a smart investment option that produces significant and long-term return on investment. Rethink your investment options and look to commercial property. Learn more at rethinkinvesting.com.au. Rethink Investing, Australia's #1 commercial buyers agency.
Another article that you ran on Tuesday was, is this a good time to be selling? Phil, basic mathematics talks about demand and supply. What's your view on that?
It's getting into the realm of advice, which I'm not really qualified to give. I'm just a journalist, Tom. I normally aggregate other people's ideas and information. Is it a good time to be selling? I'm happy to speak on behalf of as a property investor, and you as a property investor, I would be selling now. If you can hold on to your properties for whatever reason, I'd be holding on to it. Now, if you need to sell because of absolute financial distress and that's the only option available to you, that's something you may need to do. But you're going to be selling in a distressed market. If you're selling investment property, it's potentially you're selling it to other investors. So there are investors out there who are cashed up and ready to go, who are looking for good buying. But myself personally, I'm not selling. A lot of the property investors I know are not selling. And the reason for that is, not under distress by any means, but there are so many other avenues available to you to retain your property if you are under stress. You've got a moratorium on interest rate payments, 6 months with the banks where if it's a cash flow problem, that should be able to cover you off, even if you don't have any rent coming in. They should be able to mitigate or minimise that financial or cash flow impact that you have on your property. So the only property investors I know who are selling right now are in absolute dire straits in order to do that. I'd be holding firm. When it comes to owner-occupier type residents, a lot of that's going to be driven emotionally. I know there's a lot of people, and let's make sense of the headlines, Tom. You've been chatting about this for a little while on some of the other live streams that you're doing. Don't always listen to what the headlines are saying. I think you did a post last night or maybe this morning around Commonwealth Bank talking about 30% reductions in property prices at the absolute worst case scenario of 18 months or 2 years of a horrible market conditions and moving in and out of lockdown. That's worst case scenario. There are people out there right now who have very stable jobs, who are maybe looking to transact the family home. Now might be a good time to upsize or upscale if you are able to do that, because there are people that will be conflicted, or there will be people who are under stress that will be needing to sell. So I'd hold on if you could.
Look, I mean, if you're someone that was thinking of actually selling your house, that your plan was that you're going to be moving, and it's not a commercial decision, but it's one of a lifestyle, I would be tending to think about this current period. And the reason I say that, Phil, is that think about it. The first day after lockdown, we get 12 people registered and bidding on a property, which it means that you could potentially, if you were going to sell, you will have buyers. And it's a bit of a risky strategy, but I've always thought to myself, sell high, buy low. The potential is that if you have a view that you believe that you're going to get a lot of the people that are going to come out of JobKeep and potentially might end up becoming unemployed if these businesses don't open, if you have a view that that banks, when they stop the freeze on mortgage payments, and that's probably going to be around spring, and if you have a view that there's going to be, and I do believe it, I think there's a lot of stock, Phil, that didn't hit the market in March, April, and I'm actually saying June is the new March, July is the new April, and if there's a lot of stock that comes on, you might be one of those lucky people that sold, got a decent price, are able to buy when there's a lot of stock. But that article that you're making reference to was a lot of the publications covered the story. Sydney Morning Herald were one of the main media people that covered the story. And what they did was interesting. I mean, if you actually look at the details of the article, 33% was worst case scenario, but they actually had that as the headline. So that's why it's drawn everyone's attention. But I wisely decided to find an article that they'd published a month before that about them forecasting that there would be 50,000 to 150,000 people dying in Australia from coronavirus. And that article was published on March the 16th. I even gave them the authors' names. And in fact, as of yesterday, there was only 98 people. So maybe they'll get their 33% wrong as well. You had Simon Presley, who was quoted in a story, and he doesn't have the similar view. He's thinking that it's more a short-term attack on household incomes, and that there will be some more property casualties. And he went on to say the most vulnerable to the germ are the locations with the highest mortgages to service or the highest rents to pay, which sort of makes mathematical sense.
Yeah, look, Simon's a good operator. He's very research-driven. His business propertyology. And Simon, you're probably tuning into this, mate. How you going? Keep up the good work with all the research. He's got a particular view of the world, but it's very sensible and informed view. It makes a lot of sense of what he's saying right now. He's viewing it from and through the eyes as a property investor or a property investment advisor. So when you look at vacancy rates in some areas of Sydney right now, the mind absolutely boggles. But you need to look at where these assets are. A lot of them sort of close to city, inner city, universities. We don't have this huge influx of students from right across the road coming to Australia. All those properties are available now for rent. All that Airbnb stock, which has been shut down for a period of time, is now on the market. So there's a lot of, you've got to see increasing vacancy rates over time, and that's going to have impact on asset values. But, this is, let's remember, a health pandemic, which Australia by and large would appear to have under some level of control, which has turned into an economic crisis, and that's going to be with us for quite a long period of time. When you look at some of these unemployment rates, it's quite concerning. it depends where most of that unemployment is going to be taking place, which industries are most affected, hospitality, retail, for example, by and large. So a lot of those people are renters and need to rent, but a lot of them have actually handed back their keys and moved back in with mum and dad. So that's put even more investment property into the market. So short-term cash flow issue for a lot of people. Long-term, do I subscribe to the 30+% from CBA, worst case scenario? And let's have a quick chat about that. I sort of, you probably had the same internal narrative, Tom. Why would CBA come out considering that the bulk of the value in its balance sheet sits around mortgage lending? They want a strong, robust property market in Australia, and banks do like to lend money. That's how they make the money. That's how they deliver a lot of the capitals back to shareholders through dividends. So the banks don't want property prices to drop 30%. That's going to put a lot of people in distress. Our banks are very prudent in their lending. They have been for a long period of time, and they will be into the future. One of the reasons why we survived the GFC so well. But, the banks are concerned about the dynamics of property markets. There is so many unknowns at the moment. We don't yet know what's going to happen to unemployment. That's going to be the big trigger. We don't yet know, to your early point, Tom, whether, the state governments start opening up Australia again for business to take place, whether or not people are actually going to want to do that. And that, to me, is the big issue. It might take 6-12 months to get that confidence back for us as humans to connect and engage with each other once again.
Well, listen, Phil, I'm telling you, I'm going to put my money where my mouth is. I'm a buyer. I believe that people have left the share market. They've got hit with a 6 with how much it had dropped. It's still gone down significantly, even though it's made some gains. I think commercial real estate is questionable at the moment with what's going on. And I think that a lot of people are going to look at real estate, residential as a safe haven, even bank dividends. I mean, I was talking to a mate of mine. He's devastated with the dividends he got out of his investment portfolios in the big banks. So I'm a believer that real estate, and one of the biggest reasons, Phil, is that I know that there is not much development work going on. We are going to have an undersupply of real estate coming out of the ground. Other stories, the advisor, and we don't just cover real estate, we cover money, we cover life, we cover all sorts of topics that your big media company has publications in. Now, the advisor, asset delays, best interests, duty implementation. So obviously coronavirus has slowed down a lot of things that were on the horizon. The corporate regulator has announced the introduction of the best interest duty will be pushed back to 2021 to allow businesses to focus on corona, obviously.
Yeah, it's an interesting point. So if you think back, Tom, and we spoke about this time last year in property markets, state of flux around the federal election, what would happen to property values, should there be a change in government? We know where we are today, but running up to that, 6 months prior was the Royal Commission, which threw the finance world on its head. Huge amount of oversight into the practice, habits and behaviours of lenders, of credit providers, and the financial institutions. Some would say long overdue, that Royal Commission. I don't really want to get into that. But when you think back of when they handed down those findings, and by memory, it was January of 2019, one of the biggest impacted industries was the mortgage broking industry. Everyone else seemed to get off pretty scot-free, but mortgage brokers, there was a point in time when we were looking down a barrel of them banning mortgage brokers. Momentum Media, Momentum Intelligence, its research arm, did a big piece of research around that, produced a big report in lockstep with a lot of other people within the mortgage industry to actually highlight the value of mortgage brokers. And for those of you who don't know, mortgage brokers now write well over 60% of all home loans, all mortgages in Australia. They're a huge asset. And the feedback from consumers right across the nations was that 97% of them, and that number is thereabouts, I think it was, that number saw mortgage brokers as highly valued. And if they changed the way in which mortgage brokers were paid, would they stop using mortgage brokers? And yes, that would have happened. So mortgage broking, the structural mortgage broking was able to retain its current structure, and that is the lender pays the mortgage broker a commission. That's a huge win for Australian borrowers. means they get more choice and more mortgages, and it drives competition. But a big part of this was the ongoing discussion around best interest duties. And what this is, it is a good thing for the mortgage broking industry, and that is the mortgage broker will always act in the best interest of the customer or the consumer. And that has always been the case for all the best mortgage brokers. For 99% of the mortgage broking sector or mortgage brokers that I know, they always act and behave in the best interest of the consumer. And that there is the service proposition or value proposition of using mortgage broker. Every single loan I've ever had or got is through a mortgage broker. I know that there's many of them as part of your real estate gym are mortgage brokers who are looking to do what they do better. So what they talk about here is the delay in that sort of codification, and then also the implementation of best interest duties. There's a couple of steps that brokers need to go through in order to be across all that legislation recommendations out of the regulators. So they're just giving them a bit of a break for this period of time with COVID-19 to concentrate on driving their businesses forward. But that is something that will happen in mortgage broking. I think personally it's a good thing. It separates mortgage broking up and above and elevates them to, by law, having to act in the best interest of their customers, which I think is good for everyone, including mortgage brokers.
Absolutely. And they're, one of the reasons that they've picked up so much business versus the banks. I mean, there was a time when they only had a small percentage of total mortgages, but now they, as you said, that they've got the most is that it's a service industry. You no longer have to drive your car, look for parking, sit down, feel intimidated, asking for money off a bank manager. No, you get a broker. I've had brokers come and meet me at the airport and fill out all the forms for me, and that's what I call service. I've had brokers do all the running around, and that's the sort of world we live in, and that's who wins business. And the Royal Commission, Phil, the Royal Commission implementation delayed to Friday, is going to be delayed by 6 months. So I'm just going to read there. You might want to add some value there. The federal government has announced a 6-month deferral of Royal Commission commitments for unlegislated commitments associated with the Royal Commission into misconduct of banking, superannuation, financial services. Is that in line? Is that got to do with the last story, or no? That's a separate story.
It's a separate story. It's also interconnected. Findings from the Royal Commission, and look, a lot of the discussion around the Royal Commission and the actual proceedings and what the outcomes are. What it's pretty much saying is that Australia's financial services sector needs to show greater responsibility in serving the needs of customers. I'm all for that. I think it's absolutely brilliant. We could touch on this, Tom, about the responsibility for people taking on debt or credit or acting on financial advice. You as the consumer need to be responsible for what you do, but that's a completely different thing. This is some sensibility coming out of the government, and my political leaning is irrelevant. In many ways, I don't think I'm apolitical. I'm a pragmatist. I'll get on with it irrespective of the environment. But the government's done federally, and we're seeing now in the state governments, but federal government being practical in terms of focusing on the outcome that they want, focusing the outcome of the nation, and that is to retain and sustain business pre-COVID-19 as much as possible post-COVID-19. So what we are seeing, one of the great benefits of COVID-19, and this is outside of the huge health circumstances and loss of life, which is absolutely horrific. But I think we're going to start seeing a lot less bureaucracy and red tape getting in the way of Australia doing business. We've seen how quickly the government can move and how it can be forward-thinking in terms of letting business get on with doing business. And then we can sort out some of the rules and the recommendations, requirements a little bit later on. So this is what we're talking about here. Let businesses concentrate on doing business in this point of time. Let's put some of these changes in a hibernation for a point of time. We'll get them back into action because I think that they're needed as well.
Love property? The current Buyer's Agent of the Year and Director of Pure Property Investment, Paul Glossop, does too. And right now, he's offering you the chance to secure his best-selling book, A Surfer's Guide to Property Investing, absolutely free. Simply jump on Pure Property Investment's Facebook page, hit the message button and type Smart Property to claim your free book today.
Well said. There's no question about what you just said there, Phil. It appears not only has the rest of Australia adapted, it appears that even the politicians are moving at a far faster speed than previous before. The last thing I was going to ask you is, I know that you've got your broking awards, which launch this week, or I think they launched last week, the Australian Broking Awards. You'd run a lot of awards. And I mean, if you had to have a rough guess, with all the titles and publications that you've got, how many actual physical awards nights do you hold, or training conferences?
Yeah, across all our brands and communities, we would run 60, 70 big events every single year, ranging from the Australian Broking Awards. Now it's in its 10th year. The Australian Law Awards, 20 years they've been going. These are big events, all the way through to a lot of the work that you've done with us over many years, like the Advisor Better Business Summit, which is a big state roadshow with state-based awards. So we do a lot of award programs. It's absolutely critical for us as an organisation supporting our communities to give this benchmarking through our rankings, like the RAB Top 100 rankings, but also highlight those best performers across the industries that we operate within through our awards program. So the Australian Broking Awards, it's a big event, highly regarded. Our principal partner, NAB, is firm backer in highlighting as best performing brokers, aggregators, innovators and brokerages right across the nation. So we're forging ahead with all of our award programs within Momentum Media. We have the REB Awards are on at the end of June. So we're right in the midst of our judging process for that right now, Tom. That's really exciting. And we can't actually do them in person. We can't go into a big ballroom for 1,000 people. We're actually doing them as live broadcasts this year. So there's no more borders when it comes to events anymore, Tom, whether you're in Port Hedland or Darwin or, down in the Barossa Valley or in Tasmania or Sydney or Melbourne, everyone can tune in to our broadcast. It's going to be big events, the big productions, all the usual stuff that people expect from our awards program. They'll be there, but you get to do it within the comfort of your lounge room, of your dining room. And now that we can actually have 10 people gathering together, I imagine you're going to see a lot of big parties right across the nation, Tom, of 10 people in boardrooms or at people's houses tuning in and watching the Law Awards or the Broking Awards or the REB Awards these coming 2 months. So a lot of fun ahead of us, and I encourage everyone to get involved.
Yeah, I reckon that can work. I was having a conference with someone yesterday and I was having a glass of wine and I just visualized, hey, you could actually have an event on, having a drink. I know others have been doing it, having drink sessions using Zoom on Fridays and Saturday nights. But you've shifted. You're going to keep running all your events. You're going to run them virtually. You've got no plan in the near future of doing a physical event because you haven't got any clarity as to when that's can happen. But it's business as usual, Phil, is it?
Mate, it's absolutely business in the new usual. We'd love to be doing these events in person. They're great nights and they're great days or great lunches. But we need to be responsive to the needs and the requirements of our health authorities. Whether or not we can have big events this year, who knows? But it's the outcome that we want, the outcome that we need right now is to be shining the spotlight on those organisations, irrespective of their industries, that are surviving and thriving through COVID-19. People want good news stories. People want to know people doing well. It's easy to sit there as a doomsday merchant, put your head in your hands and throw in the towel and say everything's gone to the proverbial SHIT. There are some excellent businesses, and there are many, many excellent businesses across real estate, across mortgages, who are excelling in this particular market. These are the people with the right attitude. They've got the right tempo, they've got the right leadership, and they've got the right people, and they're driving through this market condition. So we want to shine the spotlight on them. We want to highlight the best of the best right across Australia. And we're very fortunate. It's a real privilege for us to have these big communities and this distribution to be able to do this. It's a great thing to do. And REB Awards at the end of June, why not? I want to highlight the best agents. I want to highlight the best offices. I want to highlight the best networks, the best boutiques, those people who are innovating, those people who are driving this great industry that we work in forward. So when we come out of COVID-19, there's continuity to this. There's good stories all the time. You just want to be one of them.
Well said. Listen, next week we're going to catch up. It's fantastic to catch up with you. We're going to have a week of what it's like having people a little bit more relaxed. Keep our fingers crossed infections don't go up or go up very little in that week. It's an important week for as a nation, commercially and health-wise. Phil, it's been great catching up with you. And geez, mate, that was a wise decision, exchanging contracts on that property you're coming to tonight.
Oh, mate, it's a nice place to be at home, and it's I spend most of the time at work though, so I don't normally record from home. I like doing it out of the office, but look, let us know what you think. We're happy to do what's making headlines at this time, 7:30 of the evening, or we could do it in the lunchtime as well. So I'm easy. Tom will be led by our community who want to know when's the best time for us to have these conversations. But let us know.
I want to give people a half-hour chunk of key stuff to do with money, business, real estate, investment, where they can grab it all in one go, because I know a lot of people are busy, and maybe a night time late in the week is a good time. All right, Phil, have a good night, and thanks a lot, everyone. If that was useful, press the share button, because to be honest with you, some of the content in there would be useful for vendors, buyers, borrowers. It's giving them information, and if you can't be a content creator, be a content curator, add your 20 cents worth on it and share the post. Thank you so much.
See you later. Thanks, Tom.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs, and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
Are low interest rates impacting on your investment returns? It's time to rethink. Rethink Investing creates wealth for clients through the strategic purchase of positively geared, high cash flow commercial property. Industrial properties, retail assets, or office spaces can be a smart investment option that produces significant and long-term return on investment. Rethink your investment options and look to commercial property. Learn more at rethinkinvesting.com.au. Rethink Investing, Australia's #1 commercial buyers agency.